I did not forget. Yeah, you kind of thought I kind of forgot the whole thing. Yeah, there's one trend line. So on the previous video for today, I talk about CAR, AV's budget, how I think there's a potential opportunity there, something brewing to the downside. And let's take a look at when it comes to trend lines, what's happening and why you have to pay attention. So I'm going to go to this section, just go to the S&P, the full structure of the S&P, probably all the way to 1985. One of the most important trend lines is this one I have talked about in previous videos. Let's go to the monthly chart and let's go all the way to the bottom of the financial crisis. The great financial crisis, 2008, 2009. Some people always think it's actually 2007 all the way to 2009. Give and take, that's fine. But at the end of the day, you're looking for the low. From the low, then, you're going to adjust your trend line. And this is very important. We're going to take the red color because it's key. Now, this one has been telling us exactly how to play everything, including the top during the health crisis of 2020. Now, the message here is, like it or not, what you're looking is to see if stocks trade, the longer they trade under that level, and let me just zoom that for you so you take a look. The longer they trade under this level, the worse it's going to be, the worse. Now, we're going back to this level that we already know, fine. But like I said on the previous video, we have a range where we can basically find a massive support at 3,270 points. That's not something to be amazed, and it's in front of us. Just take a look at the SP 500, take a look at the monthly chart, and work with the liquidity levels that we can see to the downside. Now, very important, this will dictate where we're heading next. At the beginning, it kind of settled here back on August. Yeah, not August, July was 9% to the upside. But what you can see as well is the structure the market is offering. So the low in the health crisis all the way to the trend line, that gave us 1,315 points with a 60% appreciation. And if you go from that point, the breakout all the way to the top, you have 1,230 points. So there you have the structure. Perfect structure from duplication from the low to the upside. Now, we have a 34%, so you're actually pausing, and the market is pausing and fighting inflation, fighting the Fed, fighting all these dramas that is out there. So if I were to take this and go back to what may happen next, the trend line dictates a lot. But at the same time, you can always work with other views. You can say, for example, you have the horizontal support. That's not something impressive, but it's always good to have it, which is the top. Just going to switch this to kind of bluish. This is the top of February 2020. So that's another level to consider, 3,400, and we might expect a reaction of the market right there. When it comes to understanding if this happens, you can also measure understanding this trend line. It's like, I think it's like an 11, 13 years old trend line. At one time I said it was like a 19-year-old trend line. That's not what it is. But now, what's the duplication that you might need to expect? If we are in that new low, if that were to happen, we have the rotation from 4,292 all the way to this level, and you have this range, 654 points. If we have a breakout, you must be prepared for something like that, another duplication, and that will take us, in the worst case scenario for stocks, all the way to 650, taking us back to 3,000. Again, this is not a secret. This level comes all the way back to the liquidity based on the investing trading activity back on June of 2020. This is very important to understand, because don't be fooled by thinking that it cannot go lower. And the lower it goes, believe it or not, it's actually good, because there will be a lot of money to be made on the upside. A lot of money to be made on the upside. So the name of the game, what happened? I think I have my tools. We'll do that later. I have my tools. What happened? This thing. Yeah. I can have my tools and my drawings and everything. I think probably reset the chart. That's fine. But the idea is you just need to survive. There are going to be a lot of buying put opportunities, and also there will be some volatility. So you can actually think that you will be in position to scalp the market. Kind of intraday trades will work 2-3 days buying call options, because on the way down there's a lot of volatility and the S&P will pop even 2% in a day, and that shouldn't surprise you. But you have to be ready to take those opportunities. Now, the way I plan to do this is because we're already not crash, but kind of rotate fast from the last Jackson Hole meeting. What we have to think is, okay, besides the Avis idea, there are other companies that will have to rotate to be adjusted, and they will go through a accumulation process, and that's where you want to play in. So this is the levels I'm thinking. There are a few companies I talked in my previous video for the day. I talk about Avis. That's one. I think there's another one that I will actually share with you, and we have other ideas that we're playing on the long side, because remember, if the US is not doing good as a whole, for example, you have Chinese stocks are kind of defending themselves, and you might find a little bit of alpha there, a little bit of like buy the call and go for a 24-hour return, like happened with PDD on my video. I think it was Monday or Tuesday that I published that video. So those opportunities are set out there. Now, this is not something crazy. Liquidity is there. Besides the trend line, which is very important, and this rotation that you have to think, just keep in mind that the same will happen to the upside. If we actually dip this, go and dip all this to this level, right? Then the continuation will be just go back to the same levels, and you will stop here, reassess, probably pull back, then continuation to these levels. So that's what's going to happen. So key level will be at this point the 3600. If there's a breakdown, get ready. We're going lower. And you probably just want to overall either look for weak companies that are based on technology, that higher interest rates are not good for them. The Teslas of the world will actually rotate lower. Doesn't mean the company will be destroyed, but you have to take those opportunities. So look at this trend line all the way from the low in 2009, spotting perfectly the high in January 2018, and spot perfectly the high in there you go, right there, the health crisis of 2020. It's doing it again, pullback, continuation, and now it's showing us the way. Now, more important, as soon as we are above this trend line, I guarantee you, we're going all in. We're going all in. There will be a lot of massive opportunities people will take, but in the meantime, just survive. You don't have to trade every day. You don't have to trade every week. And if you're looking to do this as a business, the most important sometimes will be, it's not a position. I don't like when people say it's a position. It's not a position. If you don't trade, no one says you have to trade. If you're a professional boxer, if you're a professional football player, you don't play every day. Otherwise, it will be dumb. Same as a professional in trading, you have to know when you have the higher odds to be successful. Right now, odds indicate you may have an opportunity buying puts, but not everywhere. So you have to look for those companies that haven't shown that weakness. When you figure that one, especially in the case of Avis, then you go for that one, okay? So far, remember, this trend line is the only one that you want to pay attention. Of course, horizontal levels that we have, if we go all the way back to 3,400, multiple levels that I can assure you will bring volatility. There will be a lot of accumulation in this process, but we're not out of the woods here yet, and stocks can always go lower. Pay attention to this trend line. It's the one that you want to play with during 2022 and 2023. Guys, thank you for watching. As usual, go to the description of the video. You have a link for my webinar, what we do in the Markets Variance Alliance, how we pick our ideas, and how we move the odds in our favor. Remember, there's a lot of fake news. Kramer, I don't want to be disrespectful to Kramer, but we know. I mean, we know what's going on. Yeah, we know what's going on at CNBC. Cool guy in a way, fascinating entertainer, but when it comes to what he's doing, how things actually play out, there's a lot of this kind of build up momentum, again, people are energetic, and then the market does the opposite. Remember, if I want the market to go up, I want you to sell because I want to buy cheaper, and actually buying assets at the cheapest prices is where actually you make life-changing profits. You build your wealth by getting very strong companies at ridiculous prices. So someone has to go out there, say something dumb, play the dummy, and then markets crash. But at the end of the day, Apple will be Apple, Amazon will be Amazon, and Tesla will just continue to be Tesla. Be sure to understand what's happening and make the most of it. Guys, thank you so much. This is the trend line, the only trend line. You thought I forgot. I did not. This is the only trend line you need to remember. Use it wisely and remember all your levels. Until then, never forget, someone always knows.